All right, let's unpack this. Welcome back to the deep dive. Our mission, as always, is to cut through the noise, get you those crucial insights that really matter, tailored specifically for you. Today, we're diving headfirst into a topic that's, well, it's not just making headlines. It's actively reshaping the future of digital assets. Ethereum. We've gathered our sources, focused especially on some key research called Ethereum's Ascent, market outperformance and ecosystem growth. And our goal for this deep dive is pretty clear. We want to understand the powerful forces driving Ethereum's recent, really remarkable performance. We'll look at the key drivers, what's happening beneath the surface, and what these big trends mean. For the broader digital landscape, and of course for you, as someone tracking these cutting-edge developments, it's about getting past the daily charts, really grasping the fundamental why.
Precisely. Headlines often just scratch the surface. They hint at deeper currents. What's truly compelling, I think, are these underlying mechanics, the things actually propelling Ethereum forward. And that's exactly what we're going to explore today. It's so important to move past those superficial reports and really dissect the nuances because they tell a story about how this whole tech and economic ecosystem is maturing.
And what a story it's becoming. Okay, let's jump straight into the most striking detail from our source material. Ethereum's absolutely remarkable market performance. We're talking about the significant outperformance of the broader crypto market. And get this, underlined by a genuinely astounding 41% monthly rise. 41%. Just to give you some perspective, imagine a major company's stock, right, the household name, suddenly gaining almost half its value in just 4 weeks. It's not some small, obscure asset we're talking about. This is a giant accelerating. That kind of surge for an asset of Ethereum stature, well, it isn't just luck. It signals something pretty profound is happening.
Yeah, if we connect this to the bigger picture, a 41% rise in a single month for an asset of Ethereum's sheer scale, that isn't just a number. It points to strong underlying conviction from market participants and significant shifts in investor sentiment. For a cryptocurrency that's already so large, so established, it's basically a blue chip in the digital asset space, this kind of rapid ascent is genuinely extraordinary, really. It suggests investors aren't just riding the general crypto wave. They're specifically seeing unique value, utility, and growth potential within Ethereum itself. That's why it's outpacing its peers so much. This isn't the kind of volatility you might see in, brand new projects. This is a major asset building serious momentum.
Right, so it's not just a rising tide lifts all boats. Ethereum has its own powerful engine running independently. And that leads us naturally to the first key driver mentioned in our source, sustained inflows into Ethereum-based investment products. So when you hear about consistent, sustained inflows of capital, what does that pattern of investment really signify for Ethereum's long-term path?
Well, this raises an important question, doesn't it? Who are these investors exactly? And what does that word sustained tell us about their long-term outlook? When we talk about Ethereum-based investment products, we generally mean things like institutional-grade vehicles, think grayscale trusts, or maybe ETFs, exchange-traded funds. Those funds traded on exchanges that track an asset's price. Or other similar structured products. These basically allow traditional investors, we're talking large institutions, family offices, maybe accredited investors, to get exposure to Ethereum without, the hassle of directly managing the crypto itself. And sustain inflows into these products. That's a critical indicator, really crucial. It signals much more than just fleeting retail speculation. It points towards increasing institutional confidence, larger scale investors feeling more secure. It strongly suggests these, let's say, sophisticated players are strategically putting capital to work. They're viewing Ethereum not as some speculative gamble, but as a long-term viable asset class. And that kind of commitment is vital for market maturity and, frankly, for its perceived legitimacy within traditional finance.
That's a key distinction, isn't it? It's this growing sense of maturity, confidence from serious capital, not just chasing quick gains. But the story doesn't stop with financial products, right? It's also crucial to look at what's actually happening on the Ethereum blockchain itself. Our source specifically highlights a general uptrend across DeFi activity built on the Ethereum blockchain. Quote. Now, for anyone who might appreciate a quick refresher, DeFi, decentralized finance, it's all about peer-to-peer financial services. Things like lending, borrowing, trading, all happening directly on the blockchain. Without the traditional banks or intermediaries, it's a whole new paradigm for finance.
Yeah, and what's truly fascinating here is how DeFi's consistent growth really validates Ethereum's core utility, its role as this unparalleled platform for permissionless financial innovation. See, an uptrend in DeFi activity isn't just about token prices going up. It directly reflects tangible use, real demand for the Ethereum network itself. When more people, more entities are actively lending, borrowing, swapping assets, providing liquidity on platforms built on Ethereum, they are intensely using the network. They're processing more transactions, running complex smart contracts, genuinely participating in this new digital economy. This increased usage, it clearly demonstrates practical, real-world application of the blockchain tech. It moves way beyond just speculative trading. It's actual economic productivity. It shows Ethereum isn't just holding value, it's actively generating value through its vibrant ecosystem, proving how robust it is as the fundamental infrastructure for these, well, groundbreaking financial models.
And DeFi certainly isn't the only engine roaring away on Ethereum. Our source also points to another trend, a general uptrend across NFT activity built on the Ethereum blockchain. Again, quick reminder for anyone needing it, NFTs, non-fungible tokens. They're essentially unique digital assets. Think of them like verifiable digital deeds. Ownership for digital items, art, collectibles, game assets, even virtual land. Unlike cryptocurrencies, where one Bitcoin is the same as another, each NFT is unique. It carries distinct value, represents digital ownership in a truly revolutionary way.
And taking a step back, the robust activity in both DeFi and NFTs on Ethereum, it really underscores the significant broadening of the network's purpose. It's way beyond just being a digital currency or a simple payment system now. This thriving NFT activity in particular highlights Ethereum's unique proven ability to host and secure digital ownership. It's fostering entirely new creative economies, cultural economies, even gaming economies. Think about artists minting and selling unique digital pieces, or gamers trading in-game assets they actually own, or even major brands experimenting with digital collectibles, immersive experiences. All of this complex activity relies heavily on Ethereum's foundational smart contract capabilities. That's the bedrock. And this consistent, widespread usage. It translates directly into heightened network demand. We're talking increased transaction fees, more smart contract execution, and the overall burning of ether for gas, the fee needed to run things on the network. All of this, in turn, further reinforces Ethereum's value proposition. It's about building and securing these diverse digital worlds, not just, sending money back and forth.
Okay, so let's tie all these threads together. For you, listening in, tracking these developments, what does it all mean? What we seem to be witnessing isn't just isolated growth spurts. It feels more like a powerful, virtuous cycle. We've seen Ethereum's remarkable 41% monthly rally, huge number. But that performance isn't just happening in a vacuum. It seems intricately linked to those sustained significant investment inflows. You mentioned the institutional players, right? And those inflows, in turn, are being actively validated, reinforced even by all this flourishing ecosystem activity. Across both DeFi and NFTs, it's showcasing real-world utility. It feels like this powerful, self-reinforcing dynamic where institutional conviction drives tangible usage, and that very usage then deepens investor confidence and kind of solidifies Ethereum's whole foundational idea.
Exactly. This gives us a much more holistic perspective. A crucial one. These aren't separate events happening randomly. They are interconnected pieces of a rapidly maturing, arguably self-sustaining ecosystem. Understanding why Ethereum is performing this way, really getting that it's driven by deep institutional conviction, plus undeniable, tangible utility across DeFi and NFTs, that's absolutely crucial. It's crucial for building a truly well-informed perspective on where these decentralized technologies might be headed. It helps you move beyond just the superficial daily news or the, momentary price swings. To grasp the fundamental why behind these powerful underlying trends, you're not just seeing the surface of the wave. You're starting to understand the complex, powerful currents underneath that are shaping its direction.
Absolutely. Well put. So just to recap our deep dive today, Ethereum has posted an impressive 41% monthly rally, significantly outperforming the broader market. This surge looks solidly fueled by sustained, increasing investment inflows into Ethereum-based products, and critically, a thriving ecosystem showing general uptrends across both its DeFi and its NFT sectors. Real usage.
Right. And as we close out, here's maybe a final provocative thought for you to consider. If this sustained, multifaceted growth in an open-source ecosystem like Ethereum continues to show such compelling real-world utility, not just in finance and art, but maybe in broader concepts like digital ownership, digital identity, how profoundly might this reshape our traditional industries? Seriously, think about that. Could it eventually lead to entirely new paradigms for economic exchange, maybe community governance, or even the very concept of digital identity, things we're perhaps only just beginning to imagine today? This isn't just about market value anymore. It's about this emergent utility economy of Ethereum, where these tangible use cases are cementing its role as essential infrastructure. Keep exploring, because the long-term implications, they're potentially profound.
Fascinating stuff to ponder, as always. Thank you for joining us on this deep dive. Keep questioning, keep learning, and we'll catch you next time for another journey into the insights that truly matter.